We got some huge news for Costco stock investors as the company reported quarterly financial results for the 12 weeks that ended May 11th, 2025. These results include the impacts of tariffs placed on the United States trading partners by President Donald Trump and how Costco's business adapted to those changes. You're not going to want to miss this if you're interested in Costco stock. So let's get into the details. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. All right, so Costco reported net income for the third quarter that increased by 13%. The company did experience a charge for the change in value of its inventory as a result of the increase of cost of goods sold of tariffs. That charge was $130 million, or less than 10% of the company's overall net income. Costco also reported a sales increase of 8% for the third quarter. Its sales came in just below $62 billion for the quarter, which was impressive because the company experienced a decline in revenue as a result of lower oil prices, lower fuel prices, and the prices charged its customers for gas at the pump. That's a meaningful percentage of the company's revenue. And so, despite that impact, it still generated a sales increase of almost double digits. E-commerce sales were up 14.8%. Costco is famous for getting people to come into the stores in person, and it was hesitant to build up its e-commerce business for many years. And more recently, it's found a way to develop its e-commerce business in a way that doesn't cannibalize the in-person business. It still attracted people to the stores at a number that's far better than most other brick and mortar retailers. As I mentioned, gas price deflation negatively impacted sales by approximately 1.1%. But that was good news for U.S. consumers as they were able to pay lower prices to fill up their cars. That left more income to spend in other categories, and the fall in oil prices has somewhat shielded U.S. consumers from the increase in cost of goods sold as a result of tariffs. Now, that was to be expected, right? Because if you're increasing tariffs, it means the cost of goods of those items that were being imported are increasing. And so people are buying fewer units of those things. And so the total amount of things that people are buying is decreasing, which means lower capacity needed to transport those goods, lower trucks being filled with those goods being transported across the United States and in other parts of the world, lower production for those goods, all in all, overall decrease in demand for oil. And so that created that decrease in oil prices over these recent few months as a result of investors realizing we're going to have slower economic output because of the tariffs. And if we're going to have slower economic output, that's less demand for oil. And so the price of oil has decreased, which has been great news for U.S. consumers because now that leaves more money out of their budget to spend on other things. So traffic or shopping frequency increased by 5.2% worldwide and 5.5% in the US. That's a huge increase and the largest increase of any of the retailers I'm following, including Target, Walmart, and others, including even the home improvement retailers like Home Depot and Lowe's. I mentioned Costco is famous in its ability to attract shoppers in person. I've never been to a Costco store in our years of being Costco members in Los Angeles where the stores are empty or even relatively empty, right? It's always jam-packed no matter what day of the week, what time I go or have gone. The stores have been jam-packed. It's actually not a good shopping experience, and I try to avoid going inside of a Costco store as much as possible because it's just a poor shopping experience. You're getting hit in the legs with shopping carts. There's no room to move. I can't stop and look at items and evaluate if I want to buy it or not. It's wild. I don't like going in there, but many shoppers worldwide are going to Costco because of the great value they offer. If you measure the things you're buying on a per unit or per ounce basis, let's say you're buying cereal or soda or ground beef or steak or salmon, whatever you're buying, and you measure the price per unit or price per ounce of the thing you're buying, it's almost always lower at Costco than in any other store around the world, or at least in the United States. Maybe there are stores that are lower price per unit around the world that I'm unaware of, that I'm not following. But Costco offers that great value, which is what brings people into the stores, which is what generates that over 90% customer retention rate for its membership program, and that's what's driven Costco's results over the previous few decades. So the average transaction value was up 0.4% worldwide and 1.1% in the US, and that includes the headwinds from gas deflation and foreign exchange. So even though the average transaction value was lower because people were paying less price for gas, overall they were still paying 1.1% more in the quarter compared to the same quarter last year. So adjusted for those items, so not including foreign exchange and gas deflation, tickets would have been up by 2.7% worldwide and 2.3% in the US, which is faster than the rate of inflation. And so you can reasonably assume that people were buying more things at Costco and that Costco is gaining market share. And they are gaining market share in various categories because of that great value proposition I mentioned earlier. And as consumer budgets become more pinched, as inflation starts to eat away at a larger percentage of people's budgets, they're going to look to Costco so that they can get more bang for their buck. During better economic times, when people have more money, more of their shopping goes to more uh, premium locations. You can say Target, for example. Target offers you a better shopping experience. The stores are better, they're larger, there's more walking room. But you also have to pay higher prices. Target's prices are notoriously higher in almost every category compared to Costco, in my experience. And similar to other stores you might go to, for example, you might, when your income is feeling pinched, you might shop for clothing at Costco, and when you're feeling better and your income is doing better, you might shop at a more premium location like Macy's or Nordstrom. So, as the US economy faces slower growth, which I am expecting here for the rest of 2025, I expect Costco will gain market share as a result of consumer behavior, shifting more interested towards getting more bang for their buck and less interested in that premium experience. As I mentioned, Costco's membership retention ratio has been great, a renewal rate of 92.7% worldwide. I'm sorry, 92.7% in the US and worldwide at over 90%. And this is after Costco initiated a membership fee increase, $5 and $10 for the regular tier and the executive tier. And that drove a membership fee income growth of 11.4%, and the increase represented roughly 4.6% of fee income in the quarter. So this was a big increase for Costco's overall membership income, the $5 and $10 increase in prices. And despite the price increase, they retained over 92.7% of their customers. That's evidence of a great customer value proposition, which, if you read my book, you'll know it's one of the 6 most important things I look at when I'm evaluating a stock is the customer value proposition. And I measured that and I judged that by several data points. And this is one data point that I judged that for Costco, which Costco scores an A plus in the customer value proposition category. I don't know of very many companies that score higher on the customer value proposition than Costco. That's why it's been able to deliver such great membership renewal rates to investors and such great turnover. Inventory turnover is best in class for Costco as well. So, huge news for Costco stock investors as the company was able to withstand headwinds and perform better than its rivals overall. And we got evidence of its great customer value proposition, as even though the company has increased membership prices, they still retained over 92% of their customers. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.